US inflation falls to 6% in February. Bitcoin goes on a massive pump. Cryptocurrency is awash with green numbers and massive percent gains. And Bitcoin dominance is returning from the dead. Oh yes, today we see yet another installment in the mainstream financial world is totally screwed and Bitcoin is the answer. Today we're going to break down the absolute biggest news of the day, which is of course the inflation numbers, and show you why there's actually quite a lot to be excited about. Although we can't predict inflation to a T, this is super promising. And this comes in tandem with the biggest moment, arguably, in the history of Bitcoin and cryptocurrency. That is, of course, the first banking crisis and the reaction for Bitcoin to go on a face-melting pump. Videos on the channel have been on an absolute tear, so make sure you subscribe and put that bell notification on to get all the new updates. Well, let's begin at the beginning, as they say. We all know inflation has been an absolute monster to tackle over the last few years, and the single biggest reason that the Fed is literally rugging the entire economy. Now, today we got news of February's inflation numbers. These are reported in March. There's a month lag, and we see that inflation rate has fallen to 6%. And this is, of course, what was being expected. Here's a more detailed breakdown of the actual price categories that are causing the inflation. Transportation is up 14%, gas and utilities up 14.3%, electricity up 12.9%, food at home 10.2%, food away from home 8.4%, shelter 8.1%, overall CPI 6, new cars 5.8, gasoline minus 2%, and used cars minus 13.6%. Now, what we really want to go into here is understanding shelter, which is 8.1%. Now, as we go into this, we can see that actual rent of shelter is 34% of inflation, 34% of the calculated inflation. 25% of that is effectively owners' rents. One of the things we know about the housing market in general is that it is way slower moving. It typically crashes and goes down at least 1 to 2 years after the mainstream equities markets. We saw this in 2008, where the collapse of the equities markets, the stock market, actually bottomed in 2009. The actual housing market didn't bottom until 2011. The point here is that as interest rates rise, the cost of housing goes up with every point of interest. And that's because everyone is living in their house based on loans. Take out a loan, pay the interest rate, and if that interest rate doubles or triples, your actual monthly rent is going to double or triple, even in a house, the exact same cost. So the net effect is that housing prices get lowered. The point is that one of the biggest contributing factors to inflation currently, structurally right now, is set to come down over the course of this year, and it won't be reflected in the current CPI or inflation readings for quite some time. Taking a quick look at crypto bubbles here, we see that the market is awash with green. Now, earlier in the day, we saw Bitcoin go on an absolutely rampant pump up here to 26,000, and this here was a pretty exhaustive pump, but it did break that psychological resistance that we've been fighting against of 25,000 for what feels like forever. We haven't been this high on Bitcoin chart since literally June of 2022, and that was a long time before the FTX collapse, which happened around here. So what's going to happen next? Well, I believe today is some great evidence that inflation is structurally coming down. Although we don't want to call an end to the war too early, we do want to acknowledge that this is an important milestone. It's worth noting that the Price Producers Index for February is scheduled to release tomorrow at 8:30 a.m. Eastern Time, which is 5:30 a.m. Pacific here on the West Coast. And we can see that since this mega pump, this short squeeze, if you will, we've seen Bitcoin march it down pretty aggressively here, actually having a huge wick downwards here to 24.4 and now popping back up here. I'd assume that the markets are going to wait until PPI is released tomorrow, and then we'll have a sense of which direction the markets really want to go off of this run. Now, it's important to realize this has been one of the most screaming pumps in the history of Bitcoin in the space of a week. We were trading at under $20,000 just a few days ago, just literally 3-4 days ago, and seeing it go up $6,000, which was almost 30% of the total value of Bitcoin at that time, is an absolute monster move. So these things will take time to settle out, and if the upward momentum continues, it'll take a second before that happens. Now, a really good chart to keep your eye on here is Bitcoin dominance. Now, Bitcoin dominance means how much is Bitcoin worth versus the entire crypto ecosystem. And as this number tends to creep its way up, it does that during bear market recoveries. We saw this throughout 2019. Bitcoin dominance went way up, and it recovered from the alt season of 2017 and 18. This is an indicator that people are flocking to Bitcoin. And in my opinion, people flocking into Bitcoin is the single most bullish long-term value creator for the industry. And that's because Bitcoin is the literal floor, the liquidity, the capital backbone of the crypto ecosystem. As Bitcoin grows, so too do the flowers that sprout upon it, the altcoins, and the entire crypto ecosystem. It's the reason that the Bitcoin ETF is being held up by the SEC, because they know that if Bitcoin were to have a massive pump, it would be impossible to stop the incredible growth of the crypto ecosystem. Though I believe that we are already way too far beyond the point of stopping this ecosystem from growing. We're way too far past that. That said, I would encourage you all to not be one of the people on the left who only care about Bitcoin price. Right now, more than ever, understanding what Bitcoin is and why it matters is one of the most important things you can study. Bitcoin was created for the single purpose of staving off monetary debasement from a centralized, socialized financial system. Right now, the message is incredibly clear. The government has said, no matter what happens to the banking sector, no matter what happens to the financial system, we will be here to bail you out. We will be here to print, to backstop, and to save. And that is the ultimate bat signal that another option is needed. Anecdotally, I can tell you, I'm having conversations with real estate moguls, with tech executives, with all kinds of business owners in the United States, and they have no idea how to position themselves, how to protect their funds, how to effectively be safe from what is a big fear of bank runs and banking collapses across the nation. Everybody is freaking the fuck out, no holds bar here. Some of the biggest billionaires I know, some of the biggest nine-figure millionaires I know have no idea what to do with their money. And the thing is here, if one bank fails, if one regional bank fails, it will be game over for the entire regional banking sector. And that is the big fear here, is that if the government lets it happen to one bank, the fear of it happening to all the other banks will spread like wildfire. People will rush to move all their money to the top four, quote, systematically important banks. This is an important moment for finance. This is an important moment for the entire country. And just to show you how crazy and dire this is, I'm going to play this clip without comment of the president addressing the nation about the banking crisis.
I want to briefly speak about what's happening in Silicon Valley Bank and Signature Bank. Today, thanks to the quick action of my administration over the past few days, Americans can have confidence that the banking system is safe. Your deposits will be there when you need them. Small businesses across the country, the deposit accounts at these banks can breathe easier knowing they'll be able to pay their workers and pay their bills. And their hardworking employees can breathe easier as well. Last week, when we learned of the problems of the banks and the
I'll just point out here, it's just not what you want to hear. It's got the steady lads vibes, steady lads, your banks are safe. It's just not something you want to hear the president talking about.
impact they could have on jobs of small businesses and banking system overall, I instructed my team to act quickly to protect these interests.
And he's going to act quickly over and over again to protect the interest of every single bank, which essentially means that they're just going to pay for it, right? They're just going to say, cool, we're not going to let the whole banking system fail, right? What would America be without a banking system? They have to keep this going, and they will.
Thank you. God bless you, and may God protect our troops. See you in California.
Mr. President, what do you know right now about why this happened? And can you assure Americans that there won't be a ripple effect?
Do you expect other banks to fail, Mr. President?
Should all depositors be protected at all banks?
The craziest part is that this press conference, which I skipped through a little bit, is ended without any Q&A. This is extremely anomalous, extremely weird that the president would not take any questions during probably one of the biggest financial moments, one of the biggest financial crises of our generation. And you can hear the reporters screaming, are there going to be ripple effects? Will all deposits be guaranteed and backstopped? These are things that, of course, the president was instructed not to answer, because the answers to that, the questions themselves, even addressing them, bring up so many harsh realities about the current banking system that effectively this administration does not want to deal with. But I'll tell you what it signals to me. What it signals to me is that the rabbit hole is a lot deeper than it appears, and that whatever happens next, people will be waking up to just how unbelievably scary the realities of the banking system are. I think Nick Carter puts it well here, thinking about this post a lot. Banking cannot be made safe because convincing regular folks to consign their savings to banks to be transformed into risky productive capital is the point of banks. Effectively, the way the banking system works is you put your money in and then the bank goes and takes on risk. They make investments. They do things that fundamentally move your money around and put your money at risk. risk without your knowing, without your consent. Well, technically you did consent for it, but let's be real. Most people don't put their money in the bank as a form of investment that they make nothing on. They put their money in the bank just so that they can pay their bills, so that they know that they can have some semblance of financial security. It's part of the American dream. It's part of capitalism. But fractional reserve banking is extremely vulnerable. And we've just seen the first major crack since 2008. This is literally the entire point of what Bitcoin was built for. This is the moment it's been waiting for, and so it's not surprising to see it erupting with price. We see the rhetoric coming out here that Biden pledges no cost to taxpayer to shield SVB. Well, it might not be a cost to the taxpayer, but it's a cost to everyone who uses and depends on US dollars. The fiat system is brutally flawed. Learning about Bitcoin is your way out, and with Bitcoin comes the entire incredible cryptocurrency ecosystem. Take a moment to realize that this ecosystem is explosive with gains. Mutable X was up over 20% earlier today. AGIX, which is an AI coin, is up almost 30%. Conflux up almost 20%. On the month, up almost 400% on the China coin narrative. As always, altcoins will absolutely rocket as soon as Bitcoin is back in the saddle. So we want to see Bitcoin dominance creeping up. We want to see Bitcoin explode with growth. And we want to know that the world has now seen the value of this new asset. This week was the first evidence that the Bitcoin prophecies, that it truly is a safe haven asset that people will pile into as the banking crisis takes place in the mainstream markets. Well, that is a major revelation. Just a quick insert here. Since recording the video, we've seen a major collapse of the Bitcoin price, bounce here in the low 24,000s and now a grind back up. But I wanted to point out this, that CPI core services excluding shelter, which is apparently Powell's favorite gauge, printed at 0.43% month over month, the highest since September. And that is not going to make life easy for the Fed. Effectively, what this is saying is that we have, although an expected CPI print on the headline CPI, we're seeing CPI core excluding shelter actually printing pretty hot, which is not something that we want to see. So again, we're seeing a duality here between what is happening with inflation and what the Fed must do to bail out, the banks, the sort of banking crisis that we're in, which was caused completely by this rapid escalation of interest rates. Also of note, whenever Bitcoin makes a major move, look for the money flow in crypto to play out. So even if Bitcoin runs into some sort of headwinds here, gets stuck under 25 for a while, and then we see liquidity flow through large caps, mid caps, and low caps, this is what's to be expected, most likely if Bitcoin does run out of steam, though it does feel like Bitcoin has some legs right now. Again, going back to the Bitcoin price chart, we see here that it had this explosive move over the last 7 days. You can see it traded from 19,000 up to 26,000. That's an absolutely monster move. So if it does chill out here in the 24s or something around there, we can look for the actual liquidity flow to move from Bitcoin down to large caps, mid caps, and small caps. Again, this is not a rush in and spend all your money moment. This is a, hey, look, we're starting to see reasons why it makes sense to start strategically allocating slowly but surely to crypto over the coming weeks, months, and beyond. That's what all of this has meant to me. It's not a chuck it all in one transaction type of moment. The war is certainly far from over, but this is an important battle, an important reinforcement in why we're here, why we're doing what we're doing, and why I believe so strongly in the new decentralized magic money on the internet. As always, I'm EllioTrades. Make sure you subscribe with bell notifications on, as we have a ton of insane content coming for you this week and next week. Make sure you watch this video too, as it's even better than the one you just watched. As always, I'm EllioTrades, and I'll see you on the next one.